This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The world braced on Sunday for Iran's response after the U.S. attacked key Iranian nuclear sites, joining Israel in the biggest Western military action against the Islamic Republic since its 1979 revolution. Iran vowed to defend itself a day after the U.S. dropped 30,000-pound bunker buster bombs onto the mountain above Iran's Fordow nuclear site, while American leaders urged Tehran to stand down and pockets of anti-war protesters emerged in U.S. cities. In a post to the Truth Social platform on Sunday, U.S. President Donald Trump raised the idea of regime change in Iran. It's not politically correct to use the term regime change, but if the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change? Mega, he wrote.
Oil prices jumped on Monday to their highest since January as the United States weekend move to join Israel in attacking Iran's nuclear facilities stoked supply concerns. Brent crude futures were up 72 cents or 0.93% to $77.73 a barrel as of 08:06 GMT. U.S. West Texas Intermediate crude advanced 71 cents or 0.96% to $74.55. Both contracts jumped by more than 3% earlier in the session to $81.40 and $78.40, respectively, touching 5-month highs before giving up some gains. The rise in prices came after U.S. President Donald Trump said he had obliterated Iran's main nuclear sites in strikes over the weekend, joining an Israeli assault in an escalation of conflict in the Middle East as Tehran vowed to defend itself.
Moving on to the top news in the energy sector.
U.S. strikes on several Iranian nuclear sites represent a meaningful escalation of the Middle East conflict that could lead Tehran to disrupt vital exports of oil and gas from the region, sparking a surge in energy prices. But history tells us that any disruption would likely be short-lived. Investors and energy markets have been on high alert since Israel launched a wave of surprise airstrikes across Iran on June 13, fearing disruption to oil and gas flows out of the Middle East, particularly through the Strait of Hormuz, a choke point between Iran and Oman through which around 20% of global oil and gas demand flows. Benchmark Brent crude prices have risen by 10% to over $77 a barrel since June 13.
India's fuel demand rose to 21.32 million metric tons in May, its highest level in more than a year, data from the Oil Ministry showed this month. India will take measures to safeguard domestic fuel supplies, Oil Minister Hardeep Singh Puri said on Sunday, after U.S. attacks on Iran's nuclear sites over the weekend raised the risk of disruption to Middle Eastern oil and gas, leading to soaring energy prices. Oil prices jumped on Monday to their highest levels since January. The share of Russian oil in India's imports in May declined marginally as refiners cut purchases from Moscow by 15.7% to 1.7 million barrels per day. BPD, tanker data from trade and industry sources showed. Next, we have the top news in metal markets. Gold eased on Monday as the dollar held firm, while market participants remained cautious, watching for any potential Iranian retaliation to U.S. strikes on its nuclear sites. Spot gold was down 0.2% at $3,359.99 an ounce, as of 0820 GMT. U.S. gold futures fell 0.3% to $3,375.20. The dollar rose 0.4% against its peers, making gold costlier for foreign buyers. Higher energy prices could potentially delay a Fed rate cut and strengthen the dollar, said Ole Hansen, head of commodity strategy at Saxo Bank.
Prices of Cobalt futures in top consumer China jumped to a more than 3-month high on Monday, as the Democratic Republic of Congo's decision to extend the ban on the battery materials export reignited supply concerns. Congo, the world's top cobalt supplier, extended the ban by another 3 months after introducing a 4-month restriction in February to curb oversupply of the electric vehicle battery material. The most active Cobalt futures contract on China's Wuxi Stainless Steel Exchange rallied more than 9% to its highest since March 14 at 254 yuan, $35.34 per kilogram.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures declined on Monday, pressured by weaker rival Dalian oils, while stronger crude oil prices and a softer ringgit capped the fall. The benchmark palm oil contract for September delivery on the Bursa Malaysia Derivatives Exchange lost 12 ringgit, or 0.29%, to 4,106 ringgit, $959.79, a metric ton at the midday break. The contract rose in the last 3 consecutive sessions. Higher crude oil prices during Asian hours limited the decline on palm prices despite weaker Dalian palm oil, a Kuala Lumpur-based trader said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.